Hi guys, this is Morris from NGT. I want to talk about the ATR. There is a tool that's called the ATR, that's the average true range. This tool is one of the most important tools that you could have on your chart in order to give you information that you need when you need it. So let's take a look at the ATR. So here we are on this chart here. It's a 4-hour chart. It's a New Zealand versus the US dollar. And what I do have at the bottom here is ATR. It's a 14-period ATR. That means that for the past 14 days, it's telling you that each candle on the 4-hour chart has an average of 29 pips for the past 14 days. But what we really want is the daily chart. So we want to see what is the average true range of each bar on a daily basis. So we look at the ATR here, and it is telling us that each daily bar will move an average of 64 pips over the past 14 days. That's what it moves. So with that information, it's very, very important, because you might find yourself sometime into a trade, and as soon you get a nice setup, the setup looks so good, and then you went in the trade and you say, okay, I catch a nice setup, and then you find that the trade turn around and go against you, and you wonder why. So the ATR is possibly the reason why, because you might not be paying attention to the ATR. Now, when the ATR said that you can get 64 pips on an average daily bar from point A to point B, from high to low. So right here, as we are looking at this chart, so looking back at these 14 bars here, we can clearly see which one was the biggest bar. And we can see that this bar here was the biggest one out of all of them. So now, the point here, if this candle opens and closes down here, we want to go ahead and measure that candle right away to see what amount of move did we get from that bar. So from the high to the low, it's telling me that this bar has moved 125 pips. So if this bar moved 125 pips all by itself, that's telling me that it do an average of twice the average day's move. So if twice the average day's move is already done, then there is really nothing left. Now I'm gonna flip to the 4-hour chart, and as you can see here, this is the same bar here. So in one 4-hour period, you have a bar that moves twice the average day's range. So we wouldn't be looking to sell anywhere around this zone here, because we know that this bar was already do all that it has to be done for the day. So it doesn't matter what setup. And if we go to the 15-minute chart, we're gonna see some beautiful setups that look tradable, but because of the knowledge of that ATR, then we would not be taking those setups. So let's take a look at the 15-minute chart, and we are going to see the setups here. So the 15-minute chart here, how we would do it, we would put a trend line underneath the chart, and whenever it breaks the trend line underneath the lows, then we would look to take a sell. So here it breaks the trend line right here, and according to the 15-minute chart, this was a setup in the direction of the major trend, which is right here. But we wouldn't take that because we already know that the average true range was done nearly twice the amount that it normally gives. So here it happened again. You could drop another trend line underneath here, and we can also see that it break down here, give you a crossover. We will still not take it. So what we want to ideally see now is for this pair to come back up into this resistance zone here, and then if it come back and break this trend line here, then more than likely we would initiate a trade. And when we measure that zone there, we can see that that is around 56 pips. So now we see that it come back in line close to where the average range or what the average range would generally give you. So now you can look to have another 50 to 60 pips from that zone. So now again, as we see here, let's recap. So the ATR is one of the most important tools, and the reason why is because it tells you that we're going to give you 50 pips or 60 pips. You would not want to be looking to sell that if you already have that much on the daily chart. Sometimes it can go 4 times the average true range, but that would be very rare. So we would definitely want to adhere to the ATR so that we do not get into bad trades. So for instance, if I have taken this trade here, then as you can see, we would be into a bad trade, because now it's going against your position and possibly bring you up in a lot of losses. So this is why it is so important to pay attention to the average true range for the day. If the average true range is done, for instance, let's say it's early in the morning and there's a news come out, and you know, on the pound dollar you might have an average true range of 120 pips for the day, and as the news come out, that thing dropped maybe 180 pips. Now, you know, you wouldn't want to be selling into that because, you know, it's already done the average true range move. And if that could be early in the morning, so for the rest of the day you wouldn't get nothing more. So pay attention to the average true range, and that will help you along the way to keep more profit in your account. If you do have a question, comment at NGT-TradersGroup.com. So again, guys, this is Morris from NGT Trading Group, and we look forward to